Julie, as you take a look here in the U.S., what's the economic opportunity if we have some Democrats coming into the White House, for example? How much money could be spent? How much money could be added?
Well, I think it's hard to say how much money will be spent or added. I think the important thing is if we're looking at the states, for example, who are actually leading on climate change, they are reducing their emissions faster than the rest of the country, while their per capita economic output is actually growing at 3 times the rate as the rest of the country. And in addition to that, their communities are seeing more money in their pockets because they're paying less for fuel at the pump, they're paying less on their power bills because they've got more energy efficiency programs in place. And then these states are also creating more clean energy jobs than the rest of the economy. And so if we look at them as an example, we see that addressing climate change and being a leader presents a tremendous economic opportunity, not only for our leaders, but especially for our communities. And it's a great model for whoever the next administration is.
So Manish, can you broaden that out on a world scale, sort of what countries have been also putting in a lot of money and getting the benefits, and talk a little bit about the numbers as well as payback time?
Absolutely. We have seen, 5-10 years ago, a lot of the philosophy around climate was you could either take action on climate or you could promote growth, work on jobs. And what we've seen over the past few years is that is a false choice, that a lot of investment in bolder climate action can result in new jobs, in new market opportunities, in considerable economic growth. You look at China, major investor in renewable energy. You look at Germany doing the same thing. And in no small part because they realize that the policy shifts that are being made are creating new markets around more energy efficient homes, around more fuel efficient vehicles, solar and wind, that these are multi-trillion-dollar opportunities where countries are seeing massive opportunities to invest.
Well, and that really relates, Julie, here to the U.S. as well in terms of jobs retraining. Like if you're not going to work in a coal factory, but you're going to go work, say, in a solar farm, what's the appetite for job retraining?
Well, I think that it's a major priority for all of our governors. And so in our coalition, we've got 25 governors who are both Republican and Democrats. Job retraining is a major priority. And I think we have to be realistic that as we transition away from a fossil fuel-based economy, there isn't going to be a magical solution where you've got lots of green jobs just waiting on the horizon. And so it really does actually require very thoughtfully retraining the workforce for the jobs that currently exist. And from labor's perspective, it's important not only to have good jobs for people to go to, but jobs that have strong benefits, that have strong wages, and that are as comparable as possible to the types of benefits that people had in their previous employment.
Julie, are states putting money into that? Is that actually happening? And how much does it cost?
Oh, absolutely, absolutely. I mean, the cost's different by state, but California is a great example. They have $35 million that they've put into what they're calling a high roads jobs program. And it's doing exactly that, where it's looking at how they can retrain people in order to transition them into jobs that are available today, not just looking at the workforce of the future. And you've got states all over the country. So Virginia, for example, yesterday came out with a new executive order moving towards 100% clean energy, and a jobs package is a big part of that executive order.
So Manish, I'm glad you brought up Germany because it kind of pivots off the conversation that Julie and I are having, because the auto sector is sort of the primary example. They have all these standards for renewable fuel, and that is just killing the automakers, and that's really having them retrenched. That's not a good thing for the German economy. So who pays for all this?
So, I think it's important when one looks at the jobs that are created by a clean energy economy that we look at this both in aggregate, but we need to also look at what it means for specific communities. When we look at the United States, there are over 3 million jobs in the clean energy sector, in renewables and solar and wind and energy efficiency, in clean vehicles. And that's 3 times as many jobs than in the fossil fuel sector. But the problem that you rightfully point out is we need to find, for those people that may lose jobs in those sectors that may transition, we need to invest heavily in those types of retraining programs to ensure that they're able to capture the benefits of the greater jobs that we will see in the clean energy economy.
So Manish, in the short run, what's going to be the right way to fund it? I mean, is it going to come from companies, for example, issuing equity and funding by debt? Is it going to come from the country issuing their own debt for these green endeavors, or subsidies? Like, how do you see the best use of money?
So, I mean, I think what we're seeing quite encouragingly, businesses are already beginning to see the value in this. There's an annual survey that the World Economic Forum puts out each year and to CEOs. And the CEOs this past year saw climate change as the #1 global risk facing business. And this has in part prompted over 600 companies to set emission reduction targets to reduce their greenhouse gas emissions in line with what the science requires. These companies come from over 45 countries. They span every single industrial sector. And the reason they're doing this is not because they're, card-carrying members of the Sierra Club. It's because they believe in the strong business case for investing in a low-carbon future.
And wrapping it up here, Julie, I just want to hit on the news with you. We're expecting to get today from President Trump sort of really pushing back on California being able to regulate their own emission standards. What are governors talking to about that if President Trump is successful?
Well, so it's not only about California regulating their emissions. The waiver is what allows California to set more stringent standards to meet their air quality goals, but it's also what allows the 13 other jurisdictions across the United States to follow those standards and the rest of the states to decide whether or not they want to be able to put in place the standards that will protect their populations from vehicle pollution. And so this is obviously a temporary setback. We're going to see court cases come through pushing back on that attack on the waiver. I think that you're likely to see states now considering whether or not they should also join in adopting those rules, and especially in looking at other opportunities for transforming the transportation sector. So looking more closely at how we incentivize the deployment of electric vehicles, just as one example. And so I think the important thing to keep in mind is these rules are critical to allow states to protect their own communities and to be the innovators in the transportation sector.